Welcome back for another top-notch video. This week, guys, we're looking at the week of July 2nd through July 6th. Interesting week for stocks, probably one of the best weeks of the month we've had so far. So let's go right into what we had. If you have a TSP account, a Roth IRA, or brokerage account, this is definitely the channel for you. We always go over, we don't so much look at the life cycle funds for TSP folks or the G fund, but for TSP we look at the CSI and F fund, and for you Roth IRA / brokerage folks, that's going to be your ETFs, IVV, VXF, EFA, AGG. This represents the S&P 500, Dow Jones, international markets, and bonds. So let's get right into what we did for this week. As always, we kind of go over a broad kind of scope of what we had. So with markets, this is taken from TSP Talk and Tom's comments. He's a commentator on TSP Talk. Just some of the things that he goes over we really like on this channel. So I'll just kind of make some of these just take a look at some of these charts that he posted. And with this chart, what we're seeing is this first one we're looking at. This is the C fund, okay, or the IVV fund on our charts. And with that, we saw a pretty good rally. Basically, kind of came out of this line here, and we're almost hitting a new resistance line here. We had some kind of a higher high in March here, and then back in June. We're really hoping that can beat that this time around. 3 times is usually, if it doesn't beat that, it could be a warning sign for sure, especially since our actual last high for the S&P 500 or IVVC fund was back in January, okay? So we really need to see a higher high with these markets, and that's one of the reasons why we haven't gotten back into this fund as of yet. We've not been so diversified, as you'll see later on in the video where we put our allocation. And as you can see with our lines down here, it's starting to move back up. With the S fund, we did just hit a higher high back in June, so that was very, very good. And we did stay above our 50-day moving average when we did come into that 2% correction right there. And it's continued, just had an amazing rally this last week, and we're hoping that it'll probably make a new high here, and we'll have to wait and see if it does that. So we'll see what happens with that. With the I fund, we do have some gaps in here. Still not liking this fund since it's below the 50-day moving average. We're really hoping that this fund will turn around eventually, but like the C fund, there just isn't. Why go for a fund that doesn't have as much support when you have like something like the S fund, which has a lot of support right now? So I don't think it's a bad place to be, but just not where I would have my money at this time. And then of course we have AGG or the F fund, and with the F fund, saw quite a bit of a rally off that last one. We hit that higher high. We're at kind of like a double top. We'll have to see where this goes, but just keep in mind that every time the Feds raise those interest rates, it's really not good for the F fund, and the stocks are just outperforming bonds by so much this year. I just don't know why you'd have your money in the F fund at this time. That's kind of a broad overview of our stocks for the week. So let's go into the actual percentages for the week. And this is also pulled from TSP Talk, their website, their share prices on Friday. And as you can see, we had quite the rally between our equity funds. I mean, 2.5% for a single week is almost really incredible. To give you an idea, that's almost I would say almost a little under half of what we made for the entire year. And if you're sitting at about 6%. That would be just about half. So that's pretty incredible week being in the markets. So just keep that in mind. And everything just really picked up. Just crazy how markets can change around like that very, very quickly. That's why we like to monitor charts by a week-by-week basis. So that's our general funds. And as you know, we were not in equities this week. We were kind of waiting for that correction, and we didn't get a good 2-day signal until about Thursday. So we ended up switching our money either Friday morning or Friday afternoon. I can't remember. anyways, that took effect by, I think it took effect by Monday, so it was probably Friday morning is when we made our allocation change from the G fund to equities. And we did pick up a little bit of a percentage on that. Since I'm talking about it, I'll go over it right now. So with our Facebook page, we posted on July 6th, back on Friday. We had the share prices on the 19th. That's when we got out, and the share prices for the S fund were sitting right around 52.91 per share price. And when we put back in, they were sitting at 52.72. So we picked up 0.37% on our portfolio and on the S fund. So it's not much, but it was a gain on the S fund. So you got to just take what you can get. If we would have put in earlier this week, we could have made close to 2%, but that just didn't happen. So we'll have to continue to wait and watch, and hopefully make another swing trade at some point, pick up a little bit more of our funds. But that's what we ended up making from our small swing trade, and now we're back into equities, and I'll show you that a little bit later on. So moving more into more technical analysis, this is IVV, or the C fund through. It is going to be through Monday, so just keep that in mind. As you can see, we're really approaching all these other tops here. This line is really, really important and critical, and as you can see, we have this. We have kind of a dual line here to see if we can top that or not. With these charts, you can kind of see like a cup-like effect here. There's the cup and then the handle, so take that for what it will be. But if we do end up breaking this, we could see a lot of fast-paced action up for this IVV fund, which would be very good since this fund's kind of lagged for the year. If we look at it from our technical analysis or our charts on the other sheet here, with IVV, our weekly funds is slowly creeping down still. So that's just something to keep in mind, but we were going off the 2-day chart since we were making quick, fast decisions. And as you can see, this is where we started to put our funds back into equities as soon as this changed over. But because of we missed it into this day, it takes one extra day to move funds over to TSP. We missed a lot of this portion here on the S fund, and I'll show you that in a little bit. But as you can see, IVV's coming out very nicely on a 2-day chart, and even on a 4-hour chart, if we look at that, we're still rising. So it's a very decent place to have money. We'll have to see if it breaks that critical thing, and if so, we might diversify into the C fund or IVV ETF. Moving on to VXF or the S fund, we are seeing some very good price action here. Really rocketed up since the other day, since last week. As you can see, that 2% really had a beautiful gain. It's crazy that it made it all back within a week. That's very, very quick, but we didn't want to get left behind, so of course we bought back in. On a technical chart, VXF, as you can see, from our weekly perspective, we're still going down, but we still have that blue line above the red line, so that's still a very good thing. And we were making our decisions off the 2-day chart since the weekly, and as you can see, it's coming out here. Once we saw this, we were thinking about it, and once on that Friday, we saw right where charts were, somewhere right in here is where we bought back in, and then of course Monday boosted us almost up to that high there. So VXF is doing very well, since it's doing a little bit better than IVV based off of a chart analysis, or this right here. Just because we've had a higher high already, we're more likely to be in this fund, and that's exactly what we're doing. Also, this is the leading fund for the year. Not that it will continue to be the leading fund, but it's just where we decided to put our funds. We made a mistake earlier this year to try to diversify a little bit, and that put us a little bit behind in the markets. Next market we have is EFA. With the EFA, where you saw it rally a little bit above this straight line here, which is a good thing, but we're still below our moving averages. It just barely ticked above that today. We'll have to see where this goes, but we're seeing a series of higher lows, or lower highs and lower lows. So that's not necessarily a good thing for these charts. Probability wise, if you could be in this one, the S fund or the I fund, you definitely want to be in this fund. As you can see, not really a head and shoulders effects going here, maybe a small shoulder head, and then maybe this is another shoulder, but we'll have to wait and see. Whereas the head and shoulders is much more evident here. We have a very critical point here that we have not crossed, and of course with EFA, just not doing so well. And if we look at it from a chart perspective, EFA is coming out weekly wise. We're seeing some really good things here, guys, on our charts. So as you can see, our DO is about negative 5.08, and we're at 5.5 here. I would maybe even with a weekly chart rollover, I would maybe even consider getting into this fund, especially with a strong 2-day. And as you can see, we do have that strong 2-day. With so much losses, we could, with a weekly chart change, I would be more interested in getting into this fund, and then maybe moving like a 50-50 profile over. But I'll show you at the end what we're going to do. We need to see this. It's only this is our Friday bar. Actually, this is our Monday bar, so it's only Monday when I'm making this video for last week. So we need to have a little more confirmation to verify that probability that chart is going to continue to rise. Other than that, that is our major indices, our equity funds. The only thing left we have is bonds. And as you can see, it's been slowly creeping up this line here with bonds, but we do have a resistance line here, and we are still below one of our moving averages, which is right here. Basically, on the charts for AGG, we could potentially see a topping out here with us losing the 2-day chart. We currently have not, so just keep that in mind, but we are getting very, very close to that. So just keep a very close eye if you're an AGG, but I'm not sure why you would be, since equities are just outperforming bonds by so much at this point in the year, being almost halfway through. So that leads us to basically all our indices in the TSP, as well as some the major indices as well for the brokerage folks through ETFs. If you guys have any questions, go ahead and write them in the comments below. As always, I really appreciate your support. Please like, subscribe, or share, and we'll see you guys next time. That's another top-notch video.